All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today's Monday, ladies and gentlemen. So there's one thing I wanted to talk to you about, and it's the upcoming Federal Reserve interest rate decision. Look, but before we jump into any of that, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Um, oh yeah, of course, quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, straight away into the economic calendar and straight away into the Wednesday, because on Wednesday we have an important economic event which the market is probably very much anticipating, and that's the interest rate decision from the Federal Reserve. Now, of course, the interest rate decision is kind of already like a given thing. It is going to be 4.5 most likely, and no surprises there. Again, most likely, because again, at the moment, everything is up in the air. But I think that the Fed, there's a little bit no rush for the Fed right now to go and cut rates. What's interesting going to be is the press conference, which is going to be half an hour later. Now, that's when the action could start. To be honest, I think I've been saying this. If you've been following me for some time, I think I say the same thing over and over during every interest rate decision when we when we're getting like the ECB, the Fed. It's the press conference that's the most interesting. Yes, if by any chance the interest rate differs from the forecast, then the interest rate decision itself is the interesting one. However, like I said, at this point, we know that the probability for the rate staying the same is more than 96%. So, actually, let me refresh this page. Maybe the 96% has changed now. June, there we go. Interesting. It was just the opposite. So there is now a 0.2% chance for a higher rate. Okay, look. Okay, that's not going to happen. They just basically decided to remove the whole idea of having a cut, because if we jump into December, we're currently expecting at least two cuts by the end of this year. But to be honest, this is what I wanted to talk to you about. Now, look, with the ongoing issues in the world, there are like geopolitical tensions across the board, economic uncertainty, because we're getting closer to the July 9th, if I'm not mistaken, the deadline of the 90-day, if you remember, if you didn't forget that, the 90-day pause that we had after the Liberation Day tariffs, like gone crazy. So we had that 90-day pause, and now we're getting closer to it. Yes, China, U.S. have been holding these talks where they're, which according to the headlines, were positive, but to be honest, look, come on, they're not really positive. They're just kind of kicking the can further a little bit. So they agreed to continue talking. Great, wonderful. That's what we're looking for, of course, right? No, of course not. But anyway, look, what I'm trying to say here is that the Fed understands that, and the Fed understands that there could be some inflationary pressure. So if they're going to go and cut rates right now, they're just going to fuel the inflation, which is already kind of a little bit on the higher side, I would say. Oh, okay, relatively, right? I want to show you this. This was last week, because last week we had the CPIs, the US CPIs that came out on Tuesday, if I'm not mistaken, or was it? No, sorry, Wednesday that they came out. So those numbers came out. If you remember, those came out. The headline came out, yes, below the forecast, but still above previous. So the core inflation came out the same as previous. Then we had the next day we had the PPIs, the US PPIs the headline came out higher than the previous. Core PPI came out a little bit lower. Don't get me wrong. Yes, a little bit lower than the previous, but still on the higher side. In general, everything is above Fed's inflation target of 2%. So, why the hell you're going to go and do cuts right now? So, just because someone is asking you, well, we know that there are There is a person who is asking the Fed to cut rates, but I think that this is where this is what the market is holding on in a way, because the market is holding on the fact that the Fed is that institution where market can revert to. Always know that the Fed will kind of pull us out and protect us and blah blah blah, right? And that's why the Fed should remain politically neutral in that sense. So, well, this is at least what they're trying to do. At least this is the front cover. Like we, of course, we don't know what's happening in the background. Well, that's not for us mortals to know. But anyway, what I want to say is that for now, jumping into all the action of this one, everybody's going to be watching very carefully what Jerome Powell has to say. Are there going to be any hints of that maybe they will revise their vision in terms of what's going to happen by the end of this year? How many rate cuts are they expecting by the end of this year? Well, again, to be honest, judging from the recent actions that Israel took when they kicked off the attacks on Iran, I mean, oil exploded. Oil went crazy to the upside here, and yes, we found good resistance a little bit here, just a little bit below that $75 mark. But in general, it's not really that good, So let me just draw this downside line here. Again, it's a tentative line. Don't get me wrong. This one's taken from the highest point of September 2023. We found maybe a little bit of resistance there, but maybe somebody will say, hey, but maybe it was this where we found resistance. Yes, in a way we can start drawing whatever we want, and in a way we always try to find some sort of logic. So whatever is closest to our logic, that's what we're more comfortable with. So if you're comfortable with this downside line, okay, fair enough. So either way, we found a little bit of resistance. We're drifting back down right now, but the thing is that this jump will be factored into June's inflation report, which is going to come out in July. So we're going to have a higher inflation again, and this kind of puts the Fed into this position that they were right. They were right that inflation will start picking up, and that's why there's no point right now to go and do any cuts. Well, of course, we'll see how that plays out, if that's the case or not. We also have the problem with the tariffs. Another thing that the Fed is probably worried about is because after July 9th, so we'll see what the market, how the market reacts, and if there's going to be like further escalation in the conflict, there's going to be some tariff issues. They will decide. They will say, U.S. will say, you know what, let's just put tariffs on all of them and live with it, and that could drag the market lower. So in a way, this could also push inflation higher, because again, companies will start passing on costs onto the consumer. At the moment, they're all fine, they're all okay, but later on, they will start passing on everything to the consumer. So you probably heard, if you're watching all these different news channels and reading different articles, you probably hear the word stagflation. And of course, this word is kind of becoming could become somewhat of a possible reality. It's when you have low unemployment, high inflation, and low growth. So okay, is this going to be the case? Let's not rush into things. But in general, at the moment, the problem is that inflation is showing that it's picking up again, and it seems like due to the current tariff wars and geopolitical tensions, inflation could start, picking up. And we are very curious how it will go closer to the end of the year. But we're not trying to rush our lives. We're enjoying every moment right now. But still, it's very interesting to see where we will be at the end of the year. And will their inflation projections, will the Fed's inflation projections will they be reiterated? There we go. That's the word. Yeah, like I said, for now, all eyes, ladies and gentlemen, on the Fed, on the press conference. Gold. Before actually jumping into gold, where's that? Where's the dollar index? There we go. So the dollar index right now is not feeling the love. It continues to trade lower while trading below a downside resistance line right here. And in a way, everything's looking quite bearish on this one. For us to shift our attention to the upside on the US dollar, we need to see a break of this downside line. So at the moment, we're not really getting that. And also, I think that it's not going to be the time for the US dollar to strengthen, in my opinion, because right now, all other countries, like all other regions, like Europe, we have Britain, we have Japan, we have China, the trade partners of U.S. Their goods are becoming more expensive right now, so basically less attractive for the U.S. consumer. So this is maybe one of the crazy ideas to shift everything into US by basically making your currency cheaper and in relation to those countries from where you're buying those goods, so that everybody would start making them in the US. Again, a crazy theory, but like I said, for now, like I said, I'm not seeing really any light at the end of the tunnel for the US dollar unless we start break from the technical perspective, unless we start breaking this downside line. Then I will maybe consider somewhat of a double bottom pattern here and push higher. But even for the double bottom pattern, you would need to wait until we see a clearance of the neckline here, which could be somewhere around this 102 territory, and then we could go from there. But at this point, it's kind of one-way traffic, so let's be very careful with that. And of course, keep your eyes on the Fed's press conference on Wednesday. Ladies and gentlemen, I hope this helps. I don't know if it confused you more or it made you, or is it more clear? But look, I just wanted to share my thoughts with you. So let me know in the comments if you agree or not. But as always, thank you very much. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you next time.